Stocks indicating a higher open on the hopes of a U.S. budget deal. World markets are following the U.S. lead. The rally that started November 16th continues to show commitment. I'm Taylor Schrantz, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with theStreet, and together we bring you the Morning Call Express. Scott, yesterday we opened up a little bit weak, but we had a really nice close. Stocks look really healthy just across about almost every sector. A key day we've been talking about was November 16th and showing commitment to this upside momentum.
Yes, every step of the way since that day, we've seen commitment by the bulls, and yesterday, the market definitely took it on the chin early, and it was hard for even guys like me. I came in with a lot of positions. I got stopped out of some, as it did feel as if we weren't going to hold, but then, in the morning we reversed. Markets held higher. You were able to get some footing, get back into key stocks. And if you were short, you also had the opportunity to switch some gears and cover. So all in all, market's been acting very well, much more than just an active cash flow trade. At this particular point, we've had a nice move from November 16th, and it looks like we're going to continue higher.
Right, well, we have futures up about 7-8 handles going into trade today. So what levels on the S&P are we taking a look at?
Let's look at it with the spiders. So if you go to the chart of the spiders, you will see here was that day Jill was talking about. Here was that reversal that was so important for market timers on November 16th. Here was your commitment to that. Went sideways, held this gap, showing some demand. Then you had a quick move up into the holiday, and then, you know what, you needed some sideways action. So what we do yesterday, we filled the gap, but we held above the 200-day. We held the 38.2% Fibonacci retracement, and now we're opening up right into resistance. So here's the 50-day moving average. The spiders is 142.41. At this spot, if you were long, into this area, you trim a little bit. If you have a hedge on, maybe add a little bit to the spider short and keep managing your positions. A portfolio approach has been working for me since that low.
We're looking for some sectors that are ready to outperform, and the ag names are one that I think are really going to have some nice performance in December. It's a seasonal trade here. We're going to take a look at the ETF, MOO, M-O-O, and you'll start to see how that pattern is lining up.
Yeah, technically it looks like it's about to break above a downtrend. So having you here on an interesting spot on the ags is great. So if you look here at the MOO, you will see here's your move off that same low area right into resistance. So we are holding higher. It's above the moving averages. If the MOO trades above 52, you could probably even buy this one or this ETF and then look for some relative strength within this group because seasonally, like you said, this is a good time of year for it.
And a relative outperformer within this space is Monsanto. We saw the end market action yesterday. Genetically modified seeds, it corners the market here. They're really focusing on key investments and growth, and the price action is really starting to confirm that in December.
Yeah, and this is one of the few that looks like it's going to make 52-week highs. You go to the chart, very technically tight, above 92. It could be, off to new highs, and that's a great trade for traders and investors that are holding it. Congratulations.
Moving along into the trenches, we're going to look at special dividends. This is kind of a catch-22 here if you're a short-term momentum trader and you caught that bid with the announcement of the one-time special dividend. Congratulations, 14 Wall Street, that's my address, sunflowers over. But for longer-term investors, we're going to start to hear a lot of chatter as to what's the next cash-rich company to potentially initiate a one-time dividend. I like the mega cap tech names, Oracle, CA, IBM, all these names have so much cash on the balance sheet, so there could be some opportunity there.
Right, and everyone's trying to figure out what's next, so it is adding fuel to the market. It's getting investors looking at it so they could catch the next place like a Costco, the next trade like an LVS, where there's been so many of them that have been providing bang for the buck. You can't just buy a company based on whether you think they're going to do a dividend, but if it's moving in the right direction and you're long because you like the fundamentals and technically, and then all of a sudden in the next few weeks they declare a special dividend, you're going to get some nice bang for the buck.
Well, the great thing is too with the mega cap tech trend, those guys that are in analytics services and really growth areas like an IBM, which we consistently talk about here over at T3, you also have the momentum opportunity and you have the long-term opportunity. Speaking of tech, let's take a look at our favorite name to trade, Apple. Scott, you had such a fantastic call with that video yesterday with that 575 level.
Yeah, it was the first time, well, sometimes, you do your work and you get paid for it. And I sold like 588 the day before, so figuring that we would pull in. You look at the chart, it made sense to look at it right around here. I'm not a rocket science, just this is support. 575 was that area, went as low as 572, closed at 582. And now the question is, can it get above this 590 to tag the 200-day? I do think it can. Also, another name that we started talking about a few days ago was Google. Finally, after that reversal in November, you saw some sideways action, got involved here, broke above this descending little channel here, and now it looks like it's on its way to 705. So there's a lot of activity, there's a lot of trades, a lot going on during this.
And we have time for one more. I also want to take a look at Priceline. We spoke about this going into the Thanksgiving holiday because it was a travel name. So not only was it fundamentals at work, but the chart looked fantastic because it was playing around that 15,200 DMA. So let's take a look at where it is now.
Okay, so let's end there. You go to Priceline, you'll see yesterday, I know Mark was talking about it a lot, and look what happened. We were talking about it in this area, came back up to resistance, went sideways, and then pow. That is a nice wide range bar that could have paid you if you were involved, and if you're an investor, you had this gap here, which I always think is very constructive. It held, and now you're breaking out. And if you go to your weekly chart, it looks as if it's on its way back to this resistance area, which comes in around 700, and then who knows, maybe even higher.
Okay, well, we've got a lot to look at for the remainder of the week. Have a great week, everyone. Catch Scott at the end of the day as he wraps up the charts for us on Options Profits, Real Money Pro, and T3Live.com.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.